And now, it's time to see what was in your inbox last night, Tariff-a-Palooza edition, with Michelle from Payometry Labs.
Welcome to your inbox last night, the show where Klarna's IPO dreams, Revolut's crypto hustle, and Zelle's dramatic changes all pull up a seat at the fintech table. This episode has more action than a group chat full of fintech VCs during earnings week. We're covering the big story, checking in on crypto chaos, peeking at policy power plays, and wrapping it all up with quick takes that even your banker cousin would call surprisingly insightful. Let's get into it. Let's get started with today's top headlines. Fintech Blueprint has the deepest of deep dives on Klarna, providing a pre-IPO parade of facts that simply is too good to pass up. Check it out. Of course, the link is in the show notes. Finextra is the piece I would turn to if I wanted to check out the story about Zelle shutting down its standalone app due to low usage, with only 2% of transactions going through it. For those of you saying, wait, I didn't even know Zelle had a standalone app. Well, this may be why. Most users now send payments directly via their banking apps, which is where 98% of the $500 billion in revenue processed in the first half of 2024 happened. In today's Why Didn't I Think of That section, Finextra is reporting that UK startup Thank You has launched a wearable tipping app for hospitality workers. The app allows you to tap your phone against a server's band, passing them a gratuity that bypasses employer control. Thank You says its app ensures workers get direct, faster access to funds while supporting compliance with the UK's new tip-sharing legislation. By now, you may have figured out that what we call the big story is usually my opportunity to opine on a topic, and today is no exception. So, let's turn now to the big story for today. I should first say that this piece came to us by way of Glenn Brooks' nightly roundup. Tearsheet has an interview and explanatory piece about how Bank of America developed its digital assistant, Erica, to meet evolving customer experience needs. Built in-house starting in 2017, Erica has logged over 2.5 billion interactions and now supports multiple business lines. Kudos to an in-house development team that can build, test, execute, and scale something like that in-house. Just about anyone in the industry would agree that is no small thing. What makes this such a compelling read is that B of A's head of consumer, business and wealth management technology team gives a masterclass that more development teams will want to emulate. Not only does he explain their logic for building in-house and the use of open source tools, but he actually explains how the firm structured dev teams across business services to integrate and evolve the tool. Understanding that agile development does not mean siloed teams, Bank of America embedded customer experience and legal into the engineering teams to work together on all aspects of Erica. As a former product owner of an agile software development team in-house at a large wealth management firm, I can say with confidence and emphasis that this is the best way to operate. The compliance issues alone that could be avoided with a setup mimicking this structure are almost incalculable. When Bank of America says, quote, "The bank is exploring Gen AI to expand Erica's capabilities while carefully managing risks and ROI," unquote, you can, well, take it to the bank. Sorry, it was just too easy. In any case, as you can tell, I have strong feelings on this subject, and I cannot stress enough how important and misguided teams who do not understand this can be. In my opinion, it's a must-read for product teams, engineering leads, and managing directors. Scientific American is reporting, yes, that's Scientific American. There are no boundaries to where we can find payments news, folks. Anyway, they're reporting that big banks like Morgan Stanley and JP Morgan are preparing for a world with 3 degrees Celsius global warming. They no longer see the Paris Agreement's 2 degrees Celsius target as realistic and are modeling future profits in a hotter, riskier world. Reports cite weakened climate policy under Trump as accelerating the trend. Checking in now on crypto and Web3. The Paypers is reporting that Circle is targeting a late April IPO following delays and a failed SPAC. The USDC issuer has engaged JP Morgan Chase and Citi to oversee the listing and is aiming for a valuation between $4 and $5 billion. The IPO is intended to enhance credibility, not raise capital, amid improving crypto market conditions. UKTN is reporting that Revolut is expanding its crypto marketing team after launching a new mobile crypto trading app. The app, Revolut X, offers 400-plus crypto pairs and targets both novice and seasoned traders. New hires across Europe will support global campaigns amid renewed crypto enthusiasm. No shade to Revolut, but bro, is that the best name you could come up with? Is everything going to be X now? The Paypers is reporting that Wirex has launched Wirex Travel, a booking platform with crypto payment and cashback options. Users can access up to 65% discounts and 8% cashback by using Wirex cards. The platform supports both fiat and crypto payments, aligning with Wirex's vision of accessible digital finance. It's time for the regulatory roundup. Nacha is seeking public comment on proposed changes to international ACH transaction rules, also known as IAT. The updates include enabling same-day IAT processing, requiring birth dates for consumer transactions, and mandating IAT contacts in the ACH registry. The goal is to improve efficiency and data quality for cross-border payments. Links for more information are included in the show notes. According to Payments Dive, the U.S. House of Representatives plans to vote on overturning a CFPB rule, giving the agency oversight of big tech payment apps. The rule affects platforms processing over 50 million transactions annually and is seen as a regulatory threat by companies like PayPal and Google Pay. If repealed, these firms could operate without CFPB oversight, raising consumer protection concerns. AC payments volume continues to rise, with Payments Dive citing the clearinghouse's report of just under 21 billion transactions in 2024. Total ACH value reached over $86 trillion, driven by growing use of real-time and business payments. The RTP network also saw a 38% volume increase, and the U.S. government is phasing out paper checks. Before we wrap, let's do some quick hits. Mastercard has launched an initiative to boost virtual card adoption in B2B payments using embedded virtual card number technology to streamline onboarding and integration between banks and platforms. Revolut is warning of rising fraud on encrypted messaging platforms such as WhatsApp and Telegram, accounting for 39% of reported scams, and Telegram-related fraud rose by 121% in the second half of 2024. Biometric authentication demand is surging in gambling platforms worldwide, with players seeking instant, secure, and anonymous payment methods. Payments Dive says that ACH and RTP transaction volume is expected to grow as the federal government ends check-based payments. In case you're keeping score, still nobody but me is concerned about the USD1 stablecoin launched by the Trump family finding its way into mandatory payments. And that's a wrap on today's FinTech thrill ride. From AI-powered chatbots to travel paid in Dogecoin, okay, fine, USDT. It's clear. The future of finance is weird, wearable, and maybe not so wildly regulated. If you laughed, learned, or side-eyed your payment provider during this episode, do us a solid. Share it, post it, send it to your team Slack channel with a fire emoji. Until next time, keep your cards virtual, your crypto storage cold, and your fraud detection sharper than your LinkedIn opinions.